Where you're going to get into trouble is, are the right provisions included in your company's operating agreement? Do you know what an operating agreement is?
Now they're making, six figures, and it's like, well, wait a minute, dude, you haven't done an S corp election. You're paying 15.3% self-employment tax.
Do you have contracts with your independent contractor, your video editor who's helping you out? And what happens if he walks away with your IP or your trademark or your branding? What do? It doesn't need to be a pain in the ass to engage professionals.
All right, welcome back to Assets and Taxes. I'm your host, Kent Fitzpatrick, Managing Director here at Asset Strategy, and I'm joined with my colleague and friend, corporate attorney and founder of Legal Help, Josh Halpern. Hey, Josh.
Mr. Kent.
If you've missed any of our two prior episodes, we're going to include some links below. And today, we are going to be talking to aspiring entrepreneurs and business owners. And if you're ready to get started, and we're eager to jump in, Josh and I are going to riff on things from maybe tax, legal, financial ideas of what you need to be thinking about if you're on your entrepreneurial journey. And Josh, I don't know if you want to kick us off with some thoughts, but the format today is going to be, we're going to be going back and forth. I'll ask you some questions, you ask me some questions, and we'll see if we can't help the aspiring entrepreneurs out in the audience here.
Yeah, to kick us off, somebody mentioned something to me recently. They said, if you're going to provide value to your clients, make sure it's not Googleable. Make sure it's not just something they can type in on Google and figure out on their own. So I really want to try to make this conversation not Googleable to the extent possible. And one of the questions I have for you, Kent, and your team is it worth it for you guys to take on let's just say a 27-year-old looking to start a side hustle or some single member business? Is it worth it for established professional firm like Asset Strategy to do that?
Yeah, it's a great question, and we get often asked, hey, do you guys have a minimum? And a lot of advisory firms will say, oh, we only work with $500,000, $1 million minimums. Our attitude is, we want to work with and have solutions for everyone. Now, it may not require, if someone needs to open a $7,000 Roth, to have them tie up a CFP for 2 hours to go over that, either for their time or our time. But we certainly can put solutions in place that they can either self-service, or as you're saying, like, we produce a tremendous amount of white papers, educational webinars like these, and maybe just some guidance so that new entrepreneur who's 27, hey, listen, Bill Gates started as a 27-year-old out of his garage, and you would have been wanting to be his financial advisor or legal expert back then. So you never know, and I've always been an entrepreneur. I love working with entrepreneurs because I can relate to them. They can relate to me. And it's not always about, hey, what's your assets we can manage, or do you need financial solutions? Maybe it's just, they need some coachable moments and point it off in the right direction. And hopefully there's value in that. So the honest answer is, I want to help them where we can and, put together support and offering that makes sense for them.
Yeah, because I think one of the biggest issues I see with young entrepreneurs is they're hesitant to engage a professional for a number of reasons. Number one, it's intimidating. Who wants to get on the phone with a bunch of different assistants and schedulers and coming into an office and having a meeting, sit down when you're just trying to make money and set up an LLC, and also talking to a lawyer just by nature is kind of intimidating. So,
well, I would probably give you a compliment, because I think the way that you've approached law is number one, it's accessible. Like you're not charging huge lawyer fees, and every minute of the day is you're getting an invoice for non-legal services. But you do a lot of fixed fee pricing, which I think that entrepreneur can budget. If they say, hey, it's going to cost me X to set up an LLC, and I need an operating agreement, I need all the elements to it. I don't want them to go to LegalZoom where they're just buying a document, but that document is not well crafted for their particular situation. So, that's
That,
kind
that's
of,
a good point. That's a good point. I appreciate that, Ken, but that's a good point. I mean, I try to be real with my clients. When they call me and they ask me, how much is this going to cost? I do them one better. And I say, you really don't even need me. You can go online and you can take the time to set up your own LLC. You could pay $99 in the state of Ohio, for example, where I'm based today, and set up your entity. And if you think you have the knowledge and you can maneuver ChatGPT and get the initial steps done, go for it. You don't need me. But where you're going to get into trouble is, are the right provisions included in your company's operating agreement? Do you know what an operating agreement is? Is ChatGPT bringing it up for you and you don't fully understand if that's even needed or not? Do you have contracts with your independent contractor, your video editor who's helping you out? What are his terms of payment? What happens if he walks away with your IP or your trademark or your branding? What do you do?
well, and we've talked about, people want to keep that legal veil of protection. And what if they want anonymity? What if they don't want to have their personal name or their information? That's where your coaching from a legal standpoint is going to make a huge, huge difference. And it doesn't have to cost a lot of money, but it's just structuring it correctly.
The problem, though, is that a lot of these young guys think they don't need this stuff. It's very easy for them to go in with the mindset of, I'm making money off my laptop, I'm drop shipping, I'm selling courses. Why do I need to get on the phone with you and pay you $1,000, $500, whatever, to get this piece of paper in place that I'm going to sign on DocuSign and then file away on my computer? Why do I need to do that? And
Well,
I,
I mean, you and I have seen this time and time again, where you have that person that may have done the legal Zoom. They've got a single member LLC. Now they're making, six figures, and it's like, well, wait a minute, dude, you haven't done an S corp election. You're paying 15.3% self-employment tax. You're
right.
paying $20,000 in self-employment tax, that we could reduce that significantly. And your concern was whether you're saving 500 or $1,000 on
Yeah.
the energy
Yeah.
setup. So.
Yeah. Yeah. Yeah.
So then let's maybe talk through a couple of pieces. So we're talking about, the legal setup. So, if you have the side hustle, which apparently over 40 million Americans do, at some point in time, maybe that dog walking service turns into a bigger operation, and you're kind of saying, do I really need my day job, or this thing is really taking flight? So, I think some of those kind of steps are, I want to set myself up in business. I want a separate checking account. I want to have that legal protection, that corporate veil. I want to have my books and records in good order. Maybe I want to be thinking about tax deductions, where I have a board of advisors, or I have an accountability plan, or maybe I hire my kids. So I think there's a lot more to it than just, filing that corporate document.
There is a lot of my clients, especially younger clients, new entrepreneurs, they want to partner with people. And the minute you say partner with people, that opens up a whole door of, what does this look like? How are we holding each other accountable? As an example, I represent a number of young clients who are software developers, and they're creating these really cool apps and businesses that are taking off, and they're on a subscription model most of the time. So their income is super, super high on a monthly basis. And they have all these partners and people that work for them and with them, and nothing is documented. And they throw around terms like, I want to give equity to this guy, I want to pay this guy monthly, da, 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 and everything's done through Stripe or PayPal or Venmo, and there's absolutely nothing. So a lot of
Yeah.
our business recently has been just inserting ourselves as corporate counsel to a lot of these young entrepreneurial businesses, and just getting all that corporate stuff done.
So it wasn't just the operating agreement to set up the partnership LLC. Maybe
Now,
it's what the partnership agreements, say, and also what the employment agreements say, because it's when things go the other way, there's a breakup or a sale or whatnot, that you haven't clarified all that because you were too cost conscious, up front, and not thinking about where this business can actually go.
right. So to kind of steer us back to the whole point of what we should cover today, if let's say that an entrepreneur, a young client, has the courage to sit down and they have the foresight to start planning with respect to some of this stuff, what does that look like when we get on the phone with them, when you guys start talking to them? Are they bombarded with information? Are they completely overwhelmed, like, oh shit, I shouldn't have done this? Or is it, what
Yeah.
is it like?
Well, I think, you and I get on a lot of those calls, and I think it's kind of a coachable moment, right? So we talked a little bit about, entity structure. Is it just you by yourself? Do you have partners? Are you going to hire people? What kind of revenues are you looking at? Are we looking at, tax breaks or tax deductions, setting up solo Ks or maybe solo K Roths? Is that too premature? So I think every engagement's different. Again, we've had conversations where, let's say someone's a high W-2 earner and they're running out of bullets in terms of what they can have for tax deductions. They're max funding their HSA and they're doing some charitable and they're doing maybe some pre-tax but where you're really going to get your bang for your buck is that side hustle in terms from a tax planning standpoint and tax strategies that will really drive down the tax expense for you.
Yeah, and there's some synergy here that I'm seeing too, that the more I practice and the more I partner with guys like Asset Strategy, there's so much overlap between talking about taxes, an estate plan, and good corporate legal planning. So the average client that I sit down with, I almost always have the same script. It's tell me about your business, tell me about your LLC that you may or may not have. Do you have a trust? Do you have a will? Do you have powers of attorney? Do you have a family? What does your investment structure look like? Is it taxable? Is it tax free? Who's your accountant? Who's your CPA? It's a team that you need, and that's why we've been so busy because everything pours into each other. So it's been really great.
Well, and what you just described is, and we've talked about it on the show before, is really our trifecta, or what we call our asset map, where you have kind of your operations, your assets, and your estate plan. And we've talked a little bit about entity structure. Well, that's only one piece of it, because I've seen people that have all kinds of LLCs and partnership LLCs and all the rest of it, and then it's flowing back to them personally. And I'm like, well, do you have an estate plan? They're like, well, what do you mean? Yeah, I have a will. I'm like, well, there's a lot more you can do from an estate plan. But one of the things that I'll mention too is that questioning at the onset is very important, because people don't know if there's benefits of having a C corp versus an S corp, because things like qualified small business stock. If my ultimate goal is that, use your software company example, that we have something here and we ultimately are going to sell this entity, maybe beyond that 5-year point. Well, there's massive tax breaks by my entity structure election being at C corp, as opposed to kind of going the LLC to LLC taxes S corp or partnership journey, versus, well, the benefits I'm going to get, even though I'm paying a flat tax of 21% plus tax to any distributions. Someone might say, well, my accountant said don't do that. Well, what's the path? What's the journey? I mean, if you're going to sell this and it's going to be a significant capital gain, well, those are the conversations we need to have early on.
And that's why we've had so much success. That's why you've had so much success building your practice and recruiting a lot of young talent. That's why I've been just, bombarded with legal inquiries, because you're a tax strategist, or really you're just a strategist. I mean, you're not just a processor. You're not a paper pusher. You're not an average CPA. And that's how I approach law. I could just talk about contracts and case law all day long with my clients, but I like to understand the whole picture and talk about insurance, talk about accounting, talk about your employees, talk about your business goals. And then I plug and play my tools as necessary. But I think that's how you got to differentiate yourself in the market today in order to attract some of these younger clients.
Yeah. Well, and I think we should have probably presented this at the beginning, that this could be a 2-part series, like kind of what to think about, or I forget the name that you said, but to call this episode, but I think there should be another version of it.
Shit you need in year one, man. It's just basic. It's basic shit. And when these clients call, it's like, do you have a trust, man? Do you have a? Oh, I thought about it. I've been kicking it on the road.
I haven't looked at that in 15 years.
I got one from 2004. Maybe it's I just got off a call with a very well-established CPA who asked me to help set up an LLC for one of his businesses. And I go, dude, you didn't do this 15 years ago when you started the business? He's like, I never got around to it. And I also need to deed the property into it. It's unbelievable. I think people are so caught up in the work.
Yeah.
You're forgetting the basics.
But all right, so this is the, early year conversation. There's probably the ongoing advisory consulting, and then there's kind of the exit side, where exit strategy, exit planning, because even once they've got these things in place, they can check all the boxes, all the rest of it. Like, I've seen some really bad things happen where they're going along and they've got an S corp, and then they buy real estate in the S corp, and it's like, do not do that because that's your operations. That's not your assets. Yes, you want the veil of protection and wall it off, but there's bad things that happen when you're buying real estate, as an example, in an S or a C corp. And so I think we want to get people started off the right way, on this journey of entrepreneurism, but we want to do maintenance along the way. And then when they're at that window on the backside, or they're going to sell the business and they're retiring and they want to do some succession planning, like each of those are different, legs of the stool, if you will, that need maintenance and oversight.
Yeah, that's interesting because how do you manage a client on an ongoing basis from a CPA's perspective? Because normally when my younger clients contact me, they view a CPA as somebody you're just touching base with to file tax returns. They're
Yeah.
not thinking of you guys as someone that's going to provide ongoing maintenance and coaching.
Well, I
So
mean, and again, our role is not, we have CPAs on our team, but we're not doing the compliance. We're not doing the tax preparation work. What we're
true,
doing is more the tax
true.
strategy. So I
Right,
think,
right.
we do regular reviews with clients, if we're doing wealth management, advisory, any insurance planning, estate planning. So I think it's, and include you with some of the legal aspects of it. So I think on those regular reviews, it's not just talking about what's going on in your portfolio or the market. It's let's take a step back. Where are we at with that in that entrepreneurial journey, and tell me what's new, what's different. Oh yeah, I'm thinking about buying a building. Well, do I need to material participate? Well, is it the building for yourself? Is it for an investment? So I think that's where a lot of these things come out. We do discovery calls for new prospective clients to kind of learn a little bit about them and tell them a little bit about us. But I think if 6 months or a year goes by, you still need to do those reviews with clients to say, hey, what's changed? Well, I'm getting married, or I'm getting divorced, or we had a baby, and so all of these different things have an effect.
This is my soundbite for today, Brandon. You can clip this, okay? This is the new way of doing business, especially for younger generations. And this is why I wanted to showcase just how we communicate internally and how we would approach onboarding a new client, for example. It doesn't need to be some burdensome, costly process. We just want to get to know you, and we provide the service that you need within the budget that you need. And it's important to approach it from a strategic standpoint, not a transactional standpoint. I think in the past, you're paying big legal bills to meet with a lawyer to give you one document or to go over one contract, but they're not advising on all different aspects of your estate plan holistically, like a guy like Kent and his team would be doing. So that's been the big differentiator.
Well, and again, I think that people need to understand that, when we offer a discovery call, it's free. It's to have that initial conversation. And if there's
Yeah.
a fit, in terms of what we can provide to them and vice versa, then we can kind of go down and, do an engagement, lay out exactly what we're looking to achieve. And then we're on a path. But have that initial conversation, because we always have situations where I got a guy, I got a gal, here's the situation. You and I will collaborate from a legal financial standpoint. We'll loop in the CPA as well. But I think that's important that you have your VFO, your virtual family office, team
Yeah, I like
working
that.
on
You're
your
getting
behalf.
dangerous with AI, and every time I read your intros, it's like it's got a new illustrator, author behind all this. I don't know what, but
We'll credit Brandon for that.
yeah, I think that might be Brandon.
Oh yeah. All right. Well,
That's good material.
is there some other things that you wanted to kind of talk to our audience today about as we're thinking about this kind of the early rise of my entrepreneurial journey?
I think the main point I wanted to get across today is that it doesn't need to be intimidating to engage professionals to help you. And as a young entrepreneur, you also need to just, and one of the first things I learned in law school, or that they teach you in law school, is that you don't know what you don't know, and you have to acknowledge that. You can go online and set up an LLC yourself, 100%. You don't have to pay me $600, $700, $1,000 to set up your entity. Go for it on your own. But keep in mind that 80%, 90% of the business on my side, on the legal side, is incoming clients who need help cleaning shit up that they did themselves or that another lawyer screwed up. So, if you want to take that risk, go for it. And I think the same applies for, your side. on the accounting and tax and estate, strategic plan. You
Well,
can
I
do
think, yeah, people, as you said before, people will Google all kinds of things, and
right.
but it doesn't necessarily mean that they're going to implement them or have a strategy. Because listen, I can talk about the home office deduction and why you may or may not want to do that, or an accountability plan, or people talk about the 280A, Augusta rule. Like those are all great ideas, but again, it has to make sense in terms of are you there yet? Because maybe
Great
everyone.
example there. Great example there. I have a niche set of clients that are in the baseball coaching space. So they develop content and they coach collegiate athletes, high school athletes, even younger, online, virtually. And one of them is very, very successful. He's probably making 100, 200 grand a month in just recurring fees for his program. And he'll just call us out of the blue and say, "Hey, there's this new tax law that allows me to move to Puerto Rico. And
Yeah.
if I relocate my whole family to Puerto Rico, I think it's called Section 160 or something like that.
Yeah.
I won't have to pay federal taxes."
Mm.
And a lot of these young clients, they like hyper focus on little tidbit ideas they get off of Instagram or online without any strategy whatsoever. And it's a very common thing.
Yeah, infinite banking.
Infinite banking.
I wouldn't get your virtual family office team by different people that are posting on Twitter. I guess that's
Yeah,
probably.
yeah. We should do a video on infinite banking, debunking a bunch of people talking about infinite banking.
Yeah, yeah. There's that's an interesting one. Um, Anyhow, I guess that just a couple of final thoughts too would be a lot of people that are on this entrepreneurial journey. They're either doing it themselves or they may be doing it with a spouse, or maybe they're involving their kids. Maybe they stepped away from a 40-year career and they want to help their children get launched. So there's a lot of things about thinking about. You talked about partnerships, but there's also family dynamics too, where if I'm hiring my children or if I'm trying to create tax deductions, or like we talked about before, should they be on my board of directors, because there might be additional tax benefits to doing that. So, I guess the repeat I'll say is it's not just about setting up an LLC as cheap as you can and going out and making widgets. I think it's good comprehensive counsel.
Yeah, good example is this board of advisors that you keep bringing up. That is a hot item with clients. I say for some reason, but I mean I know why. But it's just for some reason that's resonating with clients. I think it's because they can understand it's a good way to get a tax benefit, and it's perfect interplay between your team members. If you take the time to establish your professional support, because you advise on what the benefit is of that tax write-off, and then you also push it to legal and saying, here's what you need to have in your file for it to be legitimate. So a lot of clients are coming over to us and we're putting together that board of advisors agreement to name your kids as advisors and get qualify for those tax benefits.
Well,
And just
and listen, I tell clients all the time, don't do it half-assed, don't do it half-baked. Like
right.
do it legitimately. Have an agenda. Have a scheduled meeting.
And make it look
Have
legit.
and it needs to be legit, and have a purpose, because if I'm adding family members, well, maybe I've been an entrepreneur and I want to instill that entrepreneurial spirit in them, and be a guiding framework. So yes, I can get some tax breaks from it, but there may be a larger purpose, and it's not always about money either, or tax deductions. I mean, that's certainly a nice thing. No one needs to pay more than they need to, but how do I pass on my knowledge or my insights as an entrepreneur and guide that next generation? So if I schedule a family board meeting every 6 months, great, we can get a vacation and call the board meeting, and there may be some deductible expenses there, but there should be a purpose, and it's helping that myself as a business owner, but maybe I'm helping that next generation too.
Yeah, 100%.
That's my altruistic salt box for today, Josh.
That's your soundbite. All right. I like it. I like it.
Yeah.
Kent, I got to give you props, man. You got a young team over there. I mean, I don't know what's your secret sauce. I mean, you could be having all old farts around you. You could have all suit and ties, and
No, these guys are way more fun, and they love technology, and I'm a technology geek, and
yeah,
love educating. So this is a great opportunity.
I love it. I love it.
Well, Josh, as always, really appreciate you joining us on the show. Great conversation. Hopefully, there's some entrepreneurs or emerging entrepreneurs that will listen in. They'll take us up on some of the thought process. Don't just dive in for the cheapest entity structure. Have a conversation. Again, we offer a discovery call. There's no cost to it. In the show notes, we'll include links for follow-ups. We have a tremendous amount of white papers and resources that I encourage anyone to go in and download on a number of things we talked about today. But thank you again, my friend, and I look forward to the next episode, and maybe we'll talk about the exit side of this entrepreneurial journey.
I like it. I like it. And just remember, it doesn't need to be a pain in the ass to engage professionals. If you need help, just ask for help. We make it. This is how we operate. It's as approachable as Kent and I are. So, if you're a young entrepreneur out there and you're considering calling somebody up, but you have a bad experience, or you've heard shitty things about lawyers or accountants or tax strategists, you got to throw that out the window, because we can help you out.
And the old entrepreneurs too,
yeah, the old ones are all right. I haven't spent too much time on the old farts though. They're pretty needy. They're pretty needy.
Sounds great. Well, thanks again, Josh. We'll see you next time.
Thanks, guys.